now. The chat box, it's a feature inside of the GoToWebinar thing here. It should say chat, I think, and the other one's the questions box. Both of those are available there. Okay, so now we should be ready to go. Let's see here. Yeah, I agree. Lots of opportunities in this market. There's no doubt about it. And we're actually going to show you right now our favorite tool as well to generate supplemental income in the market. So let us do that. Okay. Alrighty. Let's get started here. I am ready to go. Apologies for a couple of minutes of delay, but need to make sure that everyone can see everything, and you guys can still see see everything. So we should be good to go. Alrighty. So, and yes, we're live. Absolutely, we are live here today. It is right now. It's Tuesday, April the 2nd. It's what about 10 minutes past the top of the hour on the East Coast. 10 minutes past 10 o'clock Pacific time, and of course it's early evening in Europe. And so again, thank you for joining everyone. As you can see, the topic, we are looking at supplemental income with options. We're looking at the markets here. As I mentioned a few minutes ago, for those people that came a few minutes early, we do expect the market here to become much more dynamic. We think the momentum trade that has been dominating the first quarter is likely going to start stalling a little bit here, and that is going to drive up we're going to see just an absolute plethora of opportunity in income opportunities as far as we're concerned. Quickly, the risk disclosure, this is important. Trading and investing does carry plenty of risks. Please make sure you are properly educated. Never trade or invest with more than one can afford to lose. I think that's very important. Also, anything we talk about here today is not financial or investment advice in any shape or form. Blue Oak Advisors, which runs the SteadyTrader.com, is not an investment advisory firm. It is purely here for educational purposes. So this is truly your father trader, portfolio manager. I originally come from more of the investment banking part of the world at JP Morgan, and in fact, what we're going to show you today is actually something that I developed and we studied and had in action during my time at JP Morgan. I am the founder and chief investment officer at Blue Oak Advisors. That's the SteadyTrader.com. I'm also the chief investment officer at our investment advisory firm, Blue Oak Advisors, at Blue Marlin Advisors, excuse me. That is, of course, a separate firm. But today, it's all about educational purposes here. So we're going to look at how we can look to generate supplemental income in equities, ETFs, options, and futures. So let's just get to it. Again, everything that I'm about to show you here today is something that we developed, a couple of managing directors and I on the side while I was working at JP Morgan, because we were trying to find out what constitutes extreme overbought and oversold, and how that might give us opportunities for income in the markets. Quickly, in terms of risks for the second quarter, as we just kicked off the second quarter here, the top 10 holdings in the S&P 500 are still very concentrated. We've seen more dispersion. I think everyone's noticed Apple and Tesla, of those stocks are certainly have diverged from other ones. But we are still seeing a lot of concentration in those names, and so that is probably going to give us a different market environment here in the second quarter than we had in the first quarter. So that's important. When we talk about volatility in the markets, what we'd like to show you here today is our vertical X Pro indicator and how we are able to find opportunities in the market to generate, again, what I like to call supplemental income. Be that on the daily timeframes through swing trades, or be that even through day trades. I'm sure some people in here like to be swing traders, some people like to be day traders, some people like to do both, so we will show you both. But just to give you an idea here, before we dig right into it, here, for example, is a stock. You can see it had a very sharp drop And then what our indicator does, it tells us when the market, or in this case, the stock is, in this case, either extremely oversold, in which case we would then either buy the stock or do a specific options trade that I will teach you here in just a few minutes. And you can see in this case, it went, rallied about 8-9% over the course of, a couple of weeks. That's typically our time frame. Here's another stock, AT&T. You can see it get oversold, 13 rallied to 15, north of 15. That's what, 15-20% in just a couple of days. So we're trying to find opportunities where the market is basically, where investors are caught off sides, where we have a huge advantage over other market participants, and we can basically take the other side of what they're doing and to generate supplemental income in the markets. Here is an intraday opportunity. This is on the day trading 5-minute time frame. You can see the stock drop very hard. Our Vertical X Pro indicator tells us this futures contract, this is the S&P 500E mini contract futures, got extremely oversold. Once those arrows stopped printing right there on that bar, it was time to either buy that futures contract or just go long it in some other shape or form. For intraday trade, you can see very quickly rally very sharply. So those are the kinds of opportunities. Here's another one on the daily chart. You can see extreme oversold, and this thing rallies really sharply, like 10-20%. Again, a tremendous income opportunity that provides itself there. If something gets extremely overbought, like this particular stock, it gives us a down arrow, which tells us that everyone is long, everyone's bullish, so it's probably good to take the other side. And so we get an opportunity to either buy a put or short the stock, or again, a very specific options idea strategy that I'm going to show you that we like to use to generate supplemental income in the markets. Here's another one, and again, we will look at this. Now, just quickly, we just finished off the first quarter. That is the red box that you can see on the screen on the calendar. We've entered the second quarter here, and from a pure seasonality perspective, the month of April for the S&P 500 actually tends to be quite positive. I just want to maybe warn people that we've had such a strong quarter for the first quarter. The S&P was up about 10%, that I actually think this year, April has a lower probability, maybe a much lower probability of being a strong month. In fact, it could actually be quite weak. So I want to just quickly throw that out there in case people are just looking at seasonality and basing all the decisions on that. Seasonality is nice to know. It's a single factor model, though. We need to look at more than that. But that's exactly why I want to show you how we like to look at generating supplemental income. This is John, and John came to me with his profit and loss statement. That's the top pane here. And if you look at this closely, you can see this was last year. He made almost $1 million in profits over the course of 6 months. And then he gave it back in about 3 weeks. And it was all because he was basically following the herd. And he was not focusing on what I have been since working with him on, which is generating supplemental income. And that greed typically is where people get in trouble. We don't expect the market to fall apart or anything like that here for the time being, but we do think we're going to see more volatility, more choppiness, and ultimately lower stock market returns, which I think provides a really good opportunity to generate supplemental income in the markets. So when you look at the markets, the distribution of returns throughout the year, particularly for the S&P 500, tends to be quite uneven. If you look at the right-hand side of this chart and you look at those blue bars, each one representing 1 month of trading, you can see we can have really good months, we can have really bad months, and of course anything in between. And so particularly for people trying to generate income in the market or supplemental income or some sort of a steadier profit, it's extremely challenging, I would argue impossible, to do that if one is directionally exposed in the market, unless one has a tool or somewhat of an edge. That brings me to just one very simple question, and I would love everyone to participate in this because it's actually for you. Type in a yes into the chat box, or type in me, M-E, if you have it one of your goals to generate income, supplemental income, be that monthly, quarterly, whatever, in your portfolio, in the markets. Maybe it's because you're retired, maybe it's because you just want to do that because you're working and you want to do that on the side for another income. Whatever the case might be, type in me if you are looking to generate supplemental income, something steadier in the markets. In addition, of course, to probably wanting to see portfolio appreciation. Type in a quick me if that is something that applies to you. And not surprisingly, lots of people are typing in me. The reason lots of people like that income or steadier positive returns is because of the predictability that they have then from an income perspective or a spending perspective. Now, it's important to understand that the markets are dynamic. So expecting to make money every single week is extremely irrational, but we can become much more linear if we just make an adjustment in the way we express our view. So all of you people are typing in me, again, thank you for participating. And this exercise is actually for you, not for me, because I think a lot of people have that goal of supplemental income in the market, or just income or steadier returns, monthly, quarterly, whatever. But a lot of people are not actually sort of consciously aware that that is one of their goals. And that leads them to then use what I consider to be much riskier strategies than they probably should be using given the goal that they have. So for lots of investors, then their sort of profit and loss curve looks a little bit like this mountain range, where they make a bunch of money, they go up the mountain, they make 3, 4, 5, 6, 10 really nice trades, and then they tend to give it all up again. And so they start right back from the beginning, and then they work themselves up again, right? They make money, and then after a month or whatever, they give it all up again. And I'm sure some of you can probably, if you're honest with yourself, can probably relate to this. Not only is that extremely frustrating because you're putting in a lot of time and have nothing to show for it, it's frustrating also because obviously one is just not making money. Because ultimately what this kind of a profit and loss curve leads to is essentially gambling in the end, because we get frustrated with our losing account or stagnating account, and then we end up just kind of throwing darts at the board, and that ultimately leads to really, really big account drawdowns. And that's really the complete antithesis of what we're trying to do, which is generate more steadier income, supplemental income, however you want to put it. So here's John again, and remember John came to me, he made almost $1 million, then lost it in 3 weeks. And it's all because he got very greedy and he wasn't focusing on what I personally consider to be a bit more of a balanced approach, where we are exposed to the markets, bullish or bearish, whatever one wants to be, but we also have an income focused approach that is most importantly repeatable. For me, this approach roughly takes about an hour per week. It's very repeatable, and again, that to me is the biggest point. I keep pointing out and mentioning the word repeatable because I think repeatability is really ultimately where we build confidence in an approach in the markets. I wrote here it's low stress and high probability. What everyone can tell you that, but let me prove it to you first. I think the most important part is the repeatability here. So when we look at this strategy, what we're looking for is the phenomena of steep slopes that have gone vertical. You can see, for example, here we have a stock that went from a steep slope to vertical, and ultimately this stock got so overbought that it couldn't go higher anymore for at least a number of weeks. Our time frame typically is a couple of weeks. On the daily charts, on the intraday charts, it's typically an hour or two or something like that. Again, we'll talk about that in more detail. And again, you get to a point then when a stock or an ETF or a futures contract gets so overbought that our indicator tells us that it's likely going to go lower or consolidate in the case of overbought, which gives us a tremendous opportunity to put on an income or supplemental income type of trade. You can also get something extremely oversold, right? So here in this case, Walmart, you can see it dropped very sharply, the steep slope turned vertical, and we ended up getting to a situation where the stock got so oversold that it simply just could no longer go down. It got bombed out, and ultimately basically had to bounce, right? And that's really kind of the point of what we're looking for. So it's about extremities of emotions is what we're looking for in the markets, and that is without question the number one focus of our indicator, of our tool, and that's what I'd like to show you here right now. So let's get to this. All right. So as you can see, this is one of those things where we're essentially looking to take the other side of human emotions. And as I said before, if we look at the market right now, we see a market that is extremely focused on momentum, and the higher probability trade here is probably to take the other side of that. So when we look at these steep slopes that have gone vertical, and I'm sure lots, have you guys ever seen a steep slope that goes vertical? Who's ever seen that before? I'm sure a lot of you have. What tends to happen is essentially, without making it more complicated than it needs to be, we end up basically getting to a point where the momentum stalls, and the upside is capped if it's overbought, or the downside is capped or limited if it gets oversold. How many people in here have ever traded an option before? Is that any options traders here? Type in yes if you've ever used options before. The reason I'm asking is it doesn't matter at all if you've used options before or not. I'm just kind of curious how many people are familiar with options, because this is something very simple in terms of the execution. So a lot of people are being taught nowadays to use very short dated options. And in order to generate income from the markets, I firmly believe, at least over the course of my 26 years in the markets, that we need to be aware that short dated options ultimately lead to blowups. I don't know, maybe some of you in here have ever used like a weekly option and you ended up losing money over time. Short dated options, they can be lucrative if we want to gamble, quote unquote. But if we want to generate, again, what I like to call supplemental income, they are probably the worst possible thing out there. So just to give you a quick idea, lots of people are being told that we need to sell options. And specifically, they're being told to use short-dated options and play the time decay game. The problem with the time decay game is with short-dated options is ultimately they blow up. And I can tell you this as a former hedge fund analyst, among many other things. Hedge funds that sell short-dated options ultimately do blow up. It's a question of time, and sometimes it takes years, but ultimately they blow up, and it's no different for individual investors. And so what I'd like to show you is essentially how we can take that concept but flip it on its head to give us what I consider to be much better odds of generating income in the market. And so what we're going to do here together for the next few minutes is we're going to do these very simple 4 steps. And again, it's extremely repeatable in my view. We're going to look for steep slopes that have gone vertical, and then we are going to put on a specific options trade that takes advantage of the situation in the market, and we'll use our Vertical X Pro indicator to find those signals. So again, we're looking for steep slopes that have gone vertical, and then at that point the market is ripe for us to put on, again, an income trade. Again, this also works intraday. I will show you, for those people that are day traders, how this can be done intraday as well using our Vertical X Pro. Here's Netflix, for example. Historically, you can see at some point it had a steep move, then went vertical, and at some point it just got so overbought that it was in our favor to put on a supplemental income trade, which again is extremely repeatable, and I'll show you exactly how it works right now. So let's just get right into it. To illustrate this, I wanted to show you 2 historical examples real quick so you can understand the concept. So I'm going to show you 2 historical examples, and then we're going to look at the current market and show you how it works. Is that fair enough? And so if you look at this chart here, you're looking at the chart of Meta, formerly known as Facebook. And you can see those 2 blue parallel lines on your screen. And you can also see that every once in a while, the stock would rally essentially out of its range and go vertical. And every time it would do that, it ultimately would mean revert lower. That's correct. But even more importantly, it would just begin to stall. So once you go from a steep to a vertical move, it begins to stall. How many people have ever seen this kind of chart before? let me know quickly. Who's seen a chart that's gone from steep to vertical and then it basically that tends to stall? Who's seen that before, right? Okay, a lot of you guys, right? And so that's really where the opportunity comes in. So let's look at this exact same chart. Here, I'm just going to use my actual charting thing here so I can doodle on the chart here for you and show you exactly. So again, this is Meta, and you can see just like before, we have that steep upward trend within those two green lines, and then we continuously rally to the upper end of that. We go vertical. Well, the point in time I'd like you to focus on here is right there. You guys can see that at that point in time right there, Meta once again rallied to the upper end, and I'm sure some of you would maybe agree that once the stock goes to that point, maybe one could take some profits. Who would agree that maybe one could take some profits, at least partial profits? If one wants to be more aggressive, maybe one could even buy a put or short the stock, right? The trouble is if I buy a put or I short the stock, who can tell me what's the one thing the stock must do at this point? If I short the stock or I buy a put or a put spread, what's the one thing the stock must do in order for me to make money? Like it must do this. Unless it does this, we're not making money. What's the one thing the stock, if I buy a put or I short the stock? Right, exactly, it has to go lower. If the stock doesn't go down, when I buy a put here or I short the stock, I ain't making money. In fact, I'm gonna lose money. But if I want to generate an income or supplemental income, in my view, we need to do something, or I need to do something that gives me a higher probability of turning an income. And so what I like to do is I like to put on trades where I don't need to be correct directionally, nor in timing as much, but where I could see, yes, in this case, the stock would go down, I could make money. But what if the stock went sideways? I could also make money. And even if it went against me to a decent degree. So if I'm looking to generate supplemental income, be that because I'm retired or because I'm working and I'm, whatever, 25, 35, 45 years old, 55, whatever, I want to do something that gives me a higher chance of turning a profit. So what we like to do when we get these extremities of overbought or oversold is to put on an options trade that looks as following. Again, this is a historical example. We're going to look at two historical examples, and then we are going to look at the current market and show you what we see happening with ideas. So at this point in time, again, you can see the stock, in our view, by our indicator, got extremely overbought. And so instead of shorting the stock or buying a put, the only sort of bet, if you will, that I made is that it doesn't go up here. So meaning that as long as the stock doesn't go up there, I should be able to make money. How do I do that? Well, in order to do this, what I need to do is I need to use an option. In this case, what we did is we sold an option contract at the 125 strike level, and then we actually bought against that for protection, another one, $5 higher. So long story short, we received $100 deposited in our broker account per contract. So if I do this with 10 options contracts, I would receive $1,000 deposited in my broker account. The reason why this is important is because in this particular instance, if I put this trade on, the only bet I'm making is that the stock, after now being extremely overbought, and we'll get to our indicator here shortly, is that it's not going to go another 8% against me after having already just moved very, very sharply, right? And so I will make money whether the stock goes sideways, whether it goes down, and even if it goes against me up to 8% over time. Those people in here that like to generate supplemental income or income from the markets, who likes this idea? We're going to go into all the details of why we're doing this, but who likes the idea of this, where you don't have to be as directionally exposed or correct, and as correct in terms of timing, right? It makes a lot, exactly, it makes a lot of sense. So specifically what we did in this particular instance is we did not use short dated options. And this is, I think, the biggest point that I'd like to bring across before we go and look at the indicator of how we find these opportunities, both on the daily chart as well as intraday. You notice that at the point in time here, this trade was done in February. However, you might also notice that we didn't use February options. In February, we used April options. And that's for a specific reason, because if we use short dated options, like in February, if we would have used, let's say, February options, if the trade then goes against us, in this case, higher, we end up basically losing 3 wheels in our car. But if I use options that expire further out in time and only hold the trade for a couple of weeks, which is the exact opposite, folks, right now, that is the exact opposite of what the crowd is doing right now, which is why this is in my view, such a brilliant supplemental income strategy. Most people right now are gunning for it using short-dated options. If we just flip the tables, use options that expire at least 55 to 85 days out in the future, hold the trade for 2 weeks, we put the odds so dramatically in our favor that it really is just it's just a numbers game. We have roughly experienced between 75 and 80% of winning trades and just getting out when the trade goes against us. And I'll show you exactly how this works. So in this case, you can see the stock actually didn't end up going lower. In this case, I'll show you examples of where that didn't happen and we made just as much money. But in this case, you can see stock did go down, and this credit that we received up front basically deteriorated to 24 cents, which means that we were able to buy back the trade for 24 cents. So we were able to pocket the difference, a profit of $76 per contract, or $760 with 10 options contracts. But again, the crazy thing is that the stock did not need to go down for me to make money. It could have just as well gone sideways or even against us up to 8%. So I hope you're starting to see kind of where we're getting at. Now, this is just a strategy, right? I'm going to show you exactly how we find these opportunities using our vertical expo indicator here in just a second. So let's go and take this a step further. Again, the key thing, the important thing here is to not use short-dated options. If I use short-dated options as a seller, and even more so as a buyer, I'm basically a losing statistic over time, right? And I stress over time. But if we use the opposite, we use options expiring 55 to 85 days out, and we only hold the trade for 2 weeks, so our profit target is typically 2 weeks. Then we have a completely different set of opportunity. I'll show you another one here before we go into the current market. Here's, for example, the S&P 500. This is the SPY ETF, and you can see it had a very steep drop at that point in time there. In fact, it dropped 30% over 3 weeks. And so instead of trying to buy the S&P there or doing something other risky, we simply thought that after it dropped this sharply, that we would just make the bet that after a 30% drop, we don't think it would drop more than another 18% over the ensuing 1 to 2 weeks. So all we really did is we sold an option way below the market down here. We bought another one against it, and we received $105 of credit deposited in our broker account. So with 10 options contracts, we would have received $1,050. Now, you might notice also that this was done in the month of March, but also notice that we used June options. So we're doing the exact opposite what a lot of people do, which is using short-dated options and basically putting on a gamble trade. So if we're looking for supplemental income in the market, or just income or steadier positive returns, in our view, we want to use options that expire further out, but only hold the trade for a couple of weeks. That's our profit target. So in this particular instance, when we put the trade on the 16th of March, you can see that we closed it on the 24th of March, so 8 calendar days later, and we were able to turn a profit of 11.4%. but the S&P 500, the SPY ETF, was at the same exact level on the 16th of March as it was on the 24th of March. So a completely flat performance in the S&P, but we were able to pick off 11.4%. And that's really the key to what we like to do. Now, because this strategy for us has such a high winning rate, it's really just a matter of sticking with it and letting the numbers play out. That's why I said before, it's a repeatability question. If I just continuously do new trades, ultimately the odds are so far stacked in my favor that it just becomes a numbers game. And I'm going to show you guys right now how we actually find these trades. We built something called the Vertical X Pro Indicator, and for those guys that came a bit early before, I already showed you a little bit, but let's go into it here in more detail. Now, the Vertical X Pro Indicator is going to help us find these supplemental income or extreme overbought and oversold opportunities, both intraday as well as in the daily charts. So let's go into it. If you guys have any, if there are specific tickers that you guys would like to look at, please do type them into the chat box. I would love to go through and address them as you bring them up. I've got one ticker here I want to just show you. We showed it quickly before for those people that came a bit early, and that's US Steel. And so with our indicator, what is designed for is, again, to find these supplemental income opportunities. In this particular case, you can see that the share price of US Steel had a very sharp drop there just a few weeks ago. So much so that our indicator, our Vertical X Pro indicator, told us the stock is oversold. And it told us that it's oversold by printing these VX up arrows. And when we get those VX up arrows, it's telling us that the stock is either going to rally or it's going to consolidate. And so all one would have had to do is, when that last arrow stopped printing, so on the 19th of March, is to either buy a call option or buy the stock, or what I like to do is sell a put option down here, buy another put option a bit lower for protection, right? Take in that credit, take in that income, keep the trade on for 2 weeks, and then move on. So in this case, if we do the count of 10 trading days, 1, 2, 3, 4, 5, 6, 7, 8, 9, and today's actually the 10th day. So today would be the day to close and book the profits. So if we do this in a repeatable manner, we have an extremely high probability of turning a profit the way that we have been doing this and the way that this is designed to be used. Excellent. Sure, GPS, and I'm just going to take some ticker symbols. You guys want to type in. Mike wants to look at Gap. Gap, okay, so Gap just got overbought just a few days ago, and you can see those Vertical X signals, right? So the first day in which this trade became valid was right there in the 22nd of March. Now the stock since then is down a little bit, down about 4 or 5%. So at that point, I could either buy a put, or I could do what I said before, which is I could sell a call up here. I could buy another call against it a bit higher using options that expire, 55 to 85 days. 10 days later, I would close the trade, hopefully for a profit, because the stock does not have to go down for me to make money. It could just as well go sideways or even a decent degree against me if I set up the trade properly. Sure. ROK, that is Rockwell Automation, okay. Then let me see if there was a signal at any point. There you go. So there's 2 signals actually in this one. This is for Larry. Larry, this is for you. So you can see we actually had an overbought signal right there. And again, at that point, I can either buy a put. In this case, you can see the stock ended up dropping about, what was that, 3-4%. Or I could just do that call spread, that bare call spread, where I sell a call up here, buy another call against it, keep it on for 1 or 2 weeks, generate that income and move on. And again, I stand to make money whether the stock goes down, sideways, or even against me to a degree. The most recent signal was right there just a number of weeks ago. And again, you can see we got the signal. Day became a valid signal was the 1st of February, and then the stock ended up rallying about the 12, 13%. Now, if I want to be simple, I can buy a call, or if I want to be higher probability, I would sell a put below the market, buy another put below it for protection, generate that income, that credit, keep it on for 1 to 2 weeks, and move on. Is this making sense, folks? Who can see who could see the value of this kind of a strategy, this kind of an approach in for your trading and investing? Does it make sense? Excuse me, I swallowed something here. Kat wants to look at BA. So that's Boeing, ticker symbol BA. Okay, so BA last got extremely oversold on the 16th of January. So what could I do? Well, I could buy, the next day I could have bought a call. As soon as we had a day without the arrow, the stock then rallied a quick 8%. Or what I could have done, Kat, is I could have sold a put down here, buy another put a little bit below it, keep the trade on for, again, roughly 10 days and move on. Now, let's see. In this case, if I do a 10-day count, what would have happened? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. The stock from that point would have been up about 4%. And again, I stand to make money whether the stock goes sideways, up, or even against me to a degree. Does that make sense, Kat? Perfect. Okay, very good. Let's look at some more tickers. You guys have a lot of tickers you want to look at, which is perfect. Target, TGT. So Target, here you go. So Target, that's an interesting one. So Target got overbought right there on the 6th of March. So that's what, not quite a month ago, three and a half weeks ago. So what could I do? When the arrow becomes valid, so when that trade becomes valid on the 7th of March, you can see it ended up dropping about 7%. So I could have bought a put if I wanted to. Or I simply sell a call spread. I sell a call up here, buy a protective call against it, and keep it on for, let's say, again, 10 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10 days later, what did the stock do? It was actually down a couple percent. Would I have turned a profit with this? Absolutely would have turned a profit on that. Yeah. Very simple. If the trade goes above the signal, we get out. Now, what's really important, folks, just to reiterate what I said before, we do not use short-dated options. The enemy in trading, particularly if we're trying to generate income, in our view, is using short-dated options. So in Target here, I would have definitely used May or even June options, because if the trade then goes against me and I get out of it, I only lose a little bit of money, or I may even make some money, right? That's really the key. But in addition to that, what's important is actually finding these trades. So the algorithm here is fine-tuned to find these opportunities. Let's have a look at BJ Holt's Club. This is for George. I think you were asking before. So this is BJ Holt Club's wholesale club, excuse me. George, you can see the stock got overbought right there on the 7th of March. It then proceeded to drop roughly 7-8%. So what could I do? I could have bought a put, sure. Or I could have just said, you know what? I don't want to risk it. I'd rather make the bet that it just either goes down, sideways, or maybe even goes up a little bit. I could have sold a call. I could have bought a call against it then for protection, generate that income, and then let's go 10 days forward. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So for the more or less, this stock would have been probably up about 1.5–2% from the point of entry. Most likely would have either made some money or flat, right? It definitely would not have lost money. Do you see that, George? Right. So instead of if I would have bought a put or shorted the stock, it would have been not as good an outcome. So that's why I like to do this. Yeah. You do not want to use short-dated options, Shine. I am 100% against using short-dated options with this strategy. Why? Because our goal, the way it's designed for, is for income. if we're using short-dated options and we're using this, it's completely defeating the purpose. If you want to day trade with this, which I'll show you in a second, Shine, there, if you want to, you can use short-dated options. I'll get to that in just a second. But let me just show a couple more. BITQ, this is for Greg. BITQ, I don't know if there's there you go. So this is an ETF, BITQ. It's a Bitcoin ETF, kind of ETF. Greg, look at this. So this stock got overbought. It's an ETF. It got overbought, and then ended up dropping like 38%. Now again, I could have bought a put, right? In this case, that worked out. Or higher probability would have been to sell a call up here, buy a protective call against it, keep it on for 1 to 2 weeks, and move on. Right? In this case, 10 days later, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This ETF was down about 15%. Definitely a very, very profitable trade. Make sense? Akamai, all right. Akamai got extremely oversold there on the 21st of February. It then ended up rallying about 6% very quickly. Could have bought a call, could have sold a bull put spread. Again, that's my preferred way on the daily charts. 10 days forward, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. The stock was up 3%. Definitely would have been a profitable trade. Who can see the repeatability here, right? To me, this matter repeatability. Now, before we look at the intraday charts, let me just show you how we actually find these opportunities. So this is actually a web-based platform. It's on our website. All I have to do is go to the members area, and when I go to the members area of our website, then we just click one button, and it opens up this page. Now, every single day we get opportunities here. So, for example, you can see 9 days ago we got U.S. Steel. Right, that was the oversold IGT, International Game Technology. This stock, and it's, you know, if it has a 0 here, it's a brand new 1-day-old opportunity, right? IGT, you can see it got oversold, then it rallied 10% again. I could have just sold a put down here, bought a protective put against it for income, and move on after my 1 to 2 weeks, right? So that's really, really important. We can actually even become granular. So someone in here might say, you know what, Serge, I only care about ETFs. In that case, if you want to only care about ETFs, you just click up here on ETFs, and then it's just going to give you the ETF opportunities, right? Every single day when there is one. If I only care about a specific sector, let's say you only care about the financial sector, right? You go in here and you look for the opportunities every single day. Now, we can also create watch lists, which means we can get these opportunities emailed to us every single day when there's a new one. So one thing I can do is I can go in here and I create a new watch list. I give it a name, and then I can select my watch list and I can add new tickers. So let's say, for example, what did we look at before? I want to look at US Steel. So if I want to add US Steel to my watch list, I just simply take it and drag it up there. IGT, I drag it up there. So now every day when there's a new oversold or overbought opportunity, it's going to send me an email to my inbox with the stocks that are, or ETFs or futures contracts or whatever, your cryptocurrencies that are overbought or oversold. I just have to go in here under trade alerts and activate that. So that way, it's a really straightforward way to do that. Does this statement make sense to everyone still? Who likes the options credit spread opportunity? Do you guys like the way that trade is structured? To me, it's my favorite way of doing it for supplemental income, but it's also very important that I actually have an indicator that tells me when something gives us the opportunity, when it's extremely oversold or overbought, right? So that's important. Excellent. Yeah, so let's quickly talk about intraday. So some people are wondering how could I do this on an intraday basis? On an intraday basis, there's a lot of opportunities. In fact, there's opportunities pretty much every single day. So I just showed you guys before, for those people that came a few minutes early, how we had just a beautiful opportunity in NVIDIA just the other day when it got extremely overbought. Now, intraday, I personally don't do options credit spreads. Intraday, I personally just would buy a put in the case if it's overbought, or buy a call if it's oversold, right? Is anyone here a day trader? Does anyone want to see like an intraday opportunity? Anyone interested in like, I don't know, like a day trade? SMH, okay, so that's like NVIDIA, right? So SMH, so here's SMH. I like to use it on a 5-minute chart, this indicator intraday, for those people like intraday. So again, you can see it got overbought there. As soon as those arrows are no longer printing, that's right there, the trade becomes valid, and then the SMH dropped about 1.5%. I would just buy a put at that point and keep it on for roughly an hour or so. That's typically what we go for intraday. Yep. Yeah, exactly. Valero Energy. Here's a Valero Energy. This is for, who's asking that? Rob? Rob, you're asking Valero Energy. So this is, you can see Valero 5-minute chart got overbought, right? At that point, I could buy a put if I wanted to. I can keep the trade on for 30 to 60 minutes. And you can see it dropped about 1.6%. I could short the stock, whatever floats your boat. I personally don't do credit spreads intraday. I just do directional trades. That's what I futures, sure. NASDAQ futures, okay. Have a look at NASDAQ. I have to pull it up because I have a different screen resolution on these screens, so it's always a back and forth. Here is NASDAQ futures, for example. So you can see it gets oversold, right, and then ultimately ends up rallying throughout the day. So it finds, again, these extremities of emotions of intraday, overbought or oversold. You can use it on gold. We can use it on bond futures, equities. Really anything that has decent liquidity. The one thing is, I do think you need good liquidity. I typically don't trade things that don't have good liquidity. So that's, for me personally, that's very important. Here's gold, sure. Yeah, you're very welcome. Here's gold. It gets extremely overbought and then drops 0.5%. So I could short the futures contract. I could buy a put. I could do options on futures if I wanted to. Sure, why not? If that's what works for you. The point is, it finds overbought and oversold, and like extreme overbought and oversold, right? Not just a little bit, like severe overbought and oversold signals. Does that make sense to everyone? Has this been helpful so far, folks? Can you guys see how this at least intuitively makes sense, right? And again, our focus on this is to generate supplemental income. So as I said before, I'd like to give everyone here access to this indicator. And so as you can see here, this is a process that is very thought through, and again, it's extremely repeatable. So I'd like to give everyone access here to the indicator for life, actually. And the way to do that is with the Options Income Secrets package. And what you get with the Options Income Secrets package is not only do you get lifetime access to the indicator at lifetime, not just a little bit, like lifetime, but also you get access to our member webinars. And really, it's designed to generate a repeatable process. So we will teach you exactly how to use the option strategy. We'll teach you how we use options, stop losses, profit targets. We give you live actionable trades every month in our member sessions that we do twice a month, both the swing trades with the options trades, including day trades. And so the benefit here is that we teach you a repeatable and steadier approach to the market. The benefit is that we start trading with more confidence. We start trading with a process. Again, repeatability, and it gets a little bit easier every day until it basically becomes second nature. So we're going to give you a cheat sheet as well, so you're not alone, because trading, as you guys probably know, can be quite lonely, and it's all about having a process. But I also, as I said, want to give you an edge in the market, and I'm going to give you an edge by giving you lifetime access to the Vertical X Pro indicator, both an installation version that you can use on your broker, but also our cloud-based version for life. There's nothing to install for that one. So that's what we're going to do here. Everyone that wants access to this today, we're going to make it available for you here today. To me, the Vertical X Pro indicator, it's really designed to find us the best supplemental income opportunities. The indicator can actually also be installed on other platforms, such as, for example, Think or Swim, such as TradeStation, NinjaTrader, TradingView.com. It's available on Wealth Charts, and it's available on Metastock as well. Of course, it's available in our cloud-based version. That's where there's nothing to install. Again, that's just purely on our website, that you just go to our members page and then just click on that button in the morning and have access to it. This is what it looks like. You literally just go in here, you click on that button right there, and it opens up the cloud-based version that you can see right here. Again, you can create watch lists and get this all sent to you. To me, the best part about the options credit spreads and the Vertical X Pro is that it gives us the highest probability supplemental income trades and also day trades, that, as I showed you before, using this process, using this indicator. So how does it all work? We're going to give you everything here to make this work, to generate, again, more supplemental income, repeatable process that everyone can follow. We stand behind what we do here. That's why we give you lifetime access, not just a little bit of access. And it's all about hand-holding. You can see what some of the people are saying. Great indicator, great strategy. It's my bread and butter strategy. The repeatability, the word repeatability constantly comes up. The only thing I'll say is I don't think this is for people that like to swing for the fences. So for people that swing for the fences, for people that are not serious about their money, I don't think this is for them. If you're a thrill seeker, this is probably not your thing. But for people that are looking to generate an income, looking to be serious about their money, this is really what it's designed for. So let's talk about how you can get access to this. Everything that you're going to get access to here is lifetime. It's 50% off today, and it's a lifetime $397. That's a one-time fee. One time, you never pay this again, for $397 for lifetime access. What's included? First of all, you get included within an options course. Lifetime access, on demand, always there for you. You get access to our twice monthly for live market scanning sessions. In those sessions, not only do we teach you how everything works, how to use the indicator, how to use it for day trading, swing trading, how the indicator works, how to use profit target stops, the option strategy, but also we give you at least one trade each time, probably two trades, both a swing trade and a day trade. The Vertical X Pro indicator, as I said before, is also yours forever, for life, included both the cloud-based version and the installed version. There's also a video on the Iron Condors made simple as well. All this right now is available. I said it's for everyone. It's for 50 people today, so that should be enough. I think if you act quick enough. The regular price is $797. We're going to make it available at 50% off today. That's $397. And the way to get access to this is by going to www.thestudytrader.com/secret. You can also use PayPal if you would like. If you use PayPal, I believe they even allow you to finance that, not us. That's through PayPal. And again, I think Joel is going to put the link also into the chat box. And there it is. It's www.studytradersecrets.com/secret. If you want to call, if you have questions, or if you just prefer to order by phone, you can give Joel a call at 401-203-7389. 401-203-7389. Again, this is all lifetime access. You never pay this again. You pay one time, and you're a lifetime member. For this. Again, as I said before, this can also be installed on various other platforms, in addition to being available on our cloud-based version. You can install it on Thinkorswim if you want to day trade it particularly. Our cloud-based version is for the swing trading. If you want to day trade with it, you will want to use Thinkorswim or TradingView or NinjaTrader or some of the other ones that you have here. We also have a chat room, and in the chat room, and I'm happy to show this to you guys quickly right now live. In the chat room, not only are there ideas that we type in there, but also if something comes up real near term, I put it in there in real time. So this is what the chat room looks like. It's actually based on Slack, so you can install it both on your phone. You can install it on any device really that that you have on your laptop, on your PC, on your you know, whatever, on your tablets and so on and so forth. So let me quickly share this with you here. This is what it looks like, and you can see, you know, I put in their ideas as they come up, and other people are chatting in there as well. And this is again lifetime access that you will have access to right there. So all this is just $397, and I do need to make you aware of the member webinars. Now, the next member webinar, and again, these are live. This is where we give you live actionable trades in addition to you having full lifetime access, of course, to the indicator, to the scanner. The next member webinar is next week. It's on April the 10th. We do them twice every single month so that we really make sure we teach you how this works so you can use this. We do it twice a month at 11 o'clock Eastern is the next one. Again, April 10th, that's next week, and 8 a.m. Pacific. When you come to those member webinars, we will make sure you know exactly how to use the indicator. We will teach you to. We go through a lot of work to make sure that everyone learns exactly how to use it, how to get set up properly. We always make sure that everyone also gets an opportunity to ask all the questions. So that's also why we have an onboarding phone call. So to me, it's really important that everyone attends the onboarding phone call. You are going to receive, as soon as you join here, a personal phone call from one of our relationship manager specialists. They will make sure you know where things are, how to get set up for the member webinars, and really anything else. And then what you want to do is you want to come back to the member webinar next week, and that is exactly where we're going to teach you exactly how to use the indicator. We're going to give you live actionable trade, and teach you how to use this for both swing trading and day trading, and teach you that option strategy that I showed you before, inside out as well. So all of that is included. Again, this is a lifetime deal. This is not a one-time deal. This is literally lifetime access for all of this. So that is the deal. If you want to take advantage of this right now, you just have to be one of the first 50. That's the only thing we ask for. That way you get 50% off. So the first 50 get 50% off. You go to www.thesteadytrader.com/secret. If you want to call in, if you have questions, or if you prefer to order by phone, certainly we can understand that. Then you just go to, you call 401-203-7389. If for any reason you have to leave right now, you have to go play golf, you have to go to a meeting, pick up your children, and you want to reserve your slot, what you can do is you can type your name and your phone number into the chat box. That way your slot is reserved, and that way when you come back later, you don't have to, you know, go through the whole thing where it then says, oh, it couldn't take your order. If you put your name and phone number in the chat box, that reserves your slot, and then our team members will give you a call so that you can order with them, or again, if you have any questions. So either go to thesteadytrader.com/secret. Again, you can use credit card, or of course PayPal, as I said before, works as well. It's for the first 50 people, $397. That's right, it's a lifetime deal, so you will never pay this again. You're a lifetime member. You own the indicator, cloud-based version, member webinars, all of that for life. 50% off right now, and there's no hidden fees, there's no quarterly fee, there's no annual fee, there's no this, that. If we upgrade the algorithm on the cloud-based version or on the install version, that will be included. You can install it on multiple platforms. If you have Thinkorswim and you have whatever wealth charts and you want to use the cloud-based version, you can install it on all those if you want to. The cloud-based version, as I said before, is for daily charts. It's for swing trading. If you want to day trade with it, you will need to install it on one of these platforms here. Again, Thinkorswim, TradingView, and some of the other ones that you see here. Yeah, thank you for coming in quickly. I appreciate it, but the orders are coming in. I just want to make sure that we give everyone a chance to do so. If you have to run, again, just put your name and phone number into the chat box. That way, the team can give you a call back and they reserve your slot. This is really the point. That way, you don't have to call back later and then the 50 slots are taken. You don't want that, and we don't want that for you. Yeah, for the member webinars, a good question by Marissa. So Marissa is asking about the member webinars. So the next member webinar is next week. Again, we do them live every single month, 2 times. So the next one is next week, April 10th at 11 Eastern, 8 a.m. Pacific. And in those member webinars, I teach you exactly how to use the indicator, how to use the process. I give you live actionable trades every single time. We do this 2 times every single month. If you can't wait until then, as soon as you come online and you've had the onboarding phone call, you can go into the members area. They will teach you how to do that. And you can click on the member webinar recordings tab. You can there watch the recording of the last member webinar that we just did. Okay. And then you can watch it that way. But again, we do them live every single month, twice. So if I were you, I would wait until next week, and we will make sure you get exactly what you need to teach you this and address any questions. Quick show of hands, has this been helpful? Who feels more comfortable that there is a repeatable process that you may consider using, be that the options credit spread strategy, be it for day trading, using an approach like this, using the vertical X pro indicator? Who can see the repeatability of it all, right? That's really the thing here. It's about the repeatability. I think without a repeatable approach, it's very difficult to make money in the markets. So all this here that we have, the indicator, the strategy, the chat room, the entire process is about the repeatability of it all. Repeatability in different market environments, not just in bull markets, not just in bear markets, really in all sorts of different markets. The repeatability factor here is extremely high. So that's really what it's designed for. Yeah, sure. Steve was asking before, can this be used on ETFs and stocks? 100%. So if you looked at before, maybe you came a bit later, but what I was showing before was our cloud-based version, where you saw that we had ETFs, we had stocks, we had even futures contracts, all sorts of things. And I'll quickly show this to you here. Give me just 1 second. Go back to it here. So if you look at the cloud-based version here, you can see there are all sorts of different asset classes up here. Equities, ETFs, breaks down by sector. So if you only care about a certain sector, or futures and whatever, it's all there. And again, we will teach you in detail how to use this cloud-based version, and of course also how to use any other version. The chat room, yep, good question. The chat room is always open. It's always there. It's always there to ask questions. We will again show you live ideas if they come up. And again, all this is in addition to you getting lifetime access, not only to the cloud-based version, but also to the install version, to the member webinars we do twice every single month. And you're part of the community of like-minded traders and investors that like to use this kind of an approach. Yeah, make sure you guys give us your name and your phone number so that they can call you back. So that they can reach you. That reserves your slot. Yeah, for sure. Yeah. No, that sounds great. Listen, folks, thank you so much for joining. Again, if you need to call in, Joel, is there. If you have any questions, you can give me a call as well. Otherwise, again, just go to the steadytrader.com/secret. It's 50% off today. That's for the first 50 people. So, sooner rather than later would be my suggestion. All this is lifetime. It's not quarterly. It's not monthly. It's no hidden fees. Lifetime access to the indicator for life. including to the member webinars as well, which we do every single month, 2 times. So thank you all for joining. I really appreciate you being here again. Good luck here in the second quarter. My guess is that we're going to see a different time the next 3 months of trading than we saw in the first 3 months of the year. I think using something like the vertical expo indicator here is a really good idea, if I may say so myself, because again, we can use the repeatable approach that this is all designed for. And one of the things about this approach too, and again, I'll quickly bring up the cloud-based version again here, just so you guys can see. What's nice here is I can put on trades. All I have to do is look for the overbought or oversold. We looked at US Steel earlier, see how it got overbought, then the stock consolidated lower, or it got oversold, and the stock went higher. The repeatability factor here is really, really high. And I think anyone that wants to trade and invest should really focus on repeatability so that one gets comfortable using a process. And this is that. This is all about repeatability. And you can become a lifetime member here right now for just $397 if you act here within the first 50. So thank you for joining, folks. I appreciate it. I really am excited to see you guys next week in the member webinar. Again, it's April 10th. In the meantime, if you want to be in the chat room, we'd love to have you in there. And with that, again, good luck in the second quarter, and we will speak to you next week on the inside. Thanks so much for listening and for joining.